Steve, I'll just begin with you. This is actually the second time in just over a year that Apple has
13 months,
changed its guidance because of China. Last time around, the stock was down 10% in a day, shrugged it off. It's more than doubled since then. Is that, you think, why investors might be looking past this one a little bit? The shares are down today, but not nearly that much.
Yeah, it's like 2%. I think at one point it was 3% at its worst. And I think the big problem here is Apple has not been able to gauge how deadly, how bad this virus is affecting things. They thought they would be at full production mode by now. They're clearly not. They did a great job navigating things like the trade war last year, playing that political game that we saw between Tim Cook and
Sure.
Donald Trump. This is harder to predict. Now, the reason why the stock is only down 2 or 3%, still viewed as temporary, I'm guessing, and that's where the optimism comes in. Stores are already starting opening. They're ramping up. They're doing a lot of health and safety checks. But what's really interesting is it's as good at logistics as Apple is, as good at the supply chain as Apple is. They weren't able to prepare for this, even with that wider than normal guidance.
Right, and Ina, they gave that wider than normal guidance only about 3 weeks ago. As John Ford has pointed out, they could have just not given guidance altogether. What do you think has changed? Why did they have enough confidence to issue it, a couple weeks back, and then today have to say, no, we're pulling it entirely?
I think it deals with the unpredictable nature of this virus. And, I'll be honest, I think this is still based on an assumption that this gets better relatively quickly. I think this guidance that Apple gave, withdrawing their guidance, is really saying, hey, things are a little bit worse than we thought a few weeks ago. Production isn't getting back to speed quite as much. But remember, Apple has dual exposure here. So most companies rely on China for production. So this is the area where Apple is not unique. Where they are unique is the fact they actually sell a lot of products in China, which is not the case for many U.S. tech giants. And that's also weaker. And, folks in China aren't going out. They aren't spending. Stores have been closed. So Apple's taking a double hit. But, I think this is still a very short-term reaction, and the market that you and Steve were talking about, the market's only down a little, assuming this is short term, this gets resolved quickly. If it doesn't, I think it's going to be a much deeper hit, not just to Apple, but to most of the tech sector.
And Steve, there are some speculations could already affect the timing of their next handset launch in September if it doesn't get back to normal pretty quickly.
Yeah, I think just before we came on air, Nikkei came out with a report that these production delays could bleed into April. Now, all these reports are saying that new phone is supposed to come out in March. Bloomberg was reporting that maybe it'll still happen in March as planned, but yeah, it could put an effect on the launch. Maybe they have a muted launch, not a big flashy event like we're used to seeing. So it could affect those things too. And I think Ina made a really good point. They're hit at it from two sides. Last year, we only saw one side. Apple misread the demand in China. Now we're seeing the demand and the manufacturing aspect of it, all because of the virus.